What is going on, guys, and welcome back to the channel. Now, in today's video, we're going to be talking about Bitcoin. Now, hearing that potentially polarizing word, you might be thinking something along the lines of, oh great, it's that crypto scam that still hasn't disappeared, completely unregulated, and quite possibly the biggest Ponzi scheme of all time. Now, I can't really knock this viewpoint because it's actually one that I used to hold myself. But over the last year or so, my view has changed drastically as I've learned more and more about it. So in this video, I want to take you guys through the basics of Bitcoin so that you can hopefully understand it if you don't already. And then I'm going to go through some of the key information that helped change my own perspective. So this will include what is Bitcoin, why are people so concerned about it, and what are the risks? Where do people perceive its value? How it's actually not just like any other crypto scam, why it might be a good addition to your investment portfolio, and how it could quite possibly be the asset that solves a great number of economic issues across the globe. But before we look at all of that, I want to give you guys a bit of context about my own situation and experience with the crypto market as a whole, because I know firsthand how it feels to get burnt by crypto. So I was massively late to the party, and I first invested in crypto back in mid-2021. I missed the two previous massive crypto rallies in 2017 and 2020. Now, in all honesty, when I bought in, I was doing it pretty ignorantly. I didn't exactly do a lot of research myself, but I had some friends that were really into the crypto space, so I just kind of blindly followed their advice and treated it as a bit of a gamble. As you guys know, stock market investing has always been my focus, so I was just using this as a little gamble on the sidelines. And I only invested 1% of my total investment portfolio into crypto. This is generally the advice people give you when investing in crypto because it's so risky and volatile. But honestly, I don't really think this is a good strategy, but I'll explain that later on in the video. Now, when you break down my crypto investments, I invested 50% into Bitcoin and 50% into Ethereum, as this is generally what people suggested doing, as those are the two largest cryptocurrencies. And during the time that I invested, there was a lot of hype around NFTs that were all associated to the Ethereum network. So with the limited knowledge I had, it all kind of made sense to me to go for those two. Now, after I made this ignorant investment, or in better words, a gamble, I then decided to move all of my Ethereum and Bitcoin onto an exchange called BlockFi, where at the time you could earn 10% on your cryptocurrency. But then, surprise, surprise, it turned out to be way too good to be true. And in November of 2022, BlockFi filed for bankruptcy, and I lost all of my crypto. Now, in hindsight, I really can't believe I made some of these stupid decisions. It was a horrific strategy from the outset that seemed to get worse and worse. And I can't believe I put my money into something that earned 10% in interest without really asking any questions when the going interest on a bank account was about 1%. So yeah, I made some terrible decisions, probably driven by greed and getting caught up in the hype. After this happened, I had a few months feeling a bit sorry for myself, but I got over it and actually ended up coming out the other end feeling very grateful, as I feel I've learned a very valuable lesson from this experience, not to invest in things you don't understand. And honestly, I'm just pleased that I didn't put more money than I did into this stupid investment. And at least I was somewhat sensible with my portfolio allocation. The way I've tried to learn from this mistake is to try and make sure that I'm not investing in things that I don't understand. As a result, I've been trying to increase my understanding of economics as a whole, stock market investing, property investing, and yes, a little bit of crypto, but more specifically, Bitcoin. Okay, so now the question, if you don't know already, what is Bitcoin? Well, it's pretty complicated, I can't lie. But I'll try and give you guys a brief and simplified explanation so it's hopefully quite easy to follow. So Bitcoin is the world's first and largest cryptocurrency, and it was created by an anonymous figure called Satoshi Nakamoto. It's a type of digital currency that's not controlled by any single bank or government, and instead it's what's called decentralised. In this case, it's maintained by a community of Bitcoin miners who use computers to validate transactions and also mine new Bitcoin. And they do this by using powerful computers to solve complex equations, and in return, they're rewarded with new Bitcoin. Now, there is a finite supply of Bitcoin of 21 million, and once they're all mined, the supply will never increase. Now, unlike regular money, where you can have a physical version, Bitcoin exists only in a digital form on what's called the blockchain, and this acts as a ledger to record all Bitcoin transactions. Now, people use it to buy things, send money to one another, or as an investment product, but all of this Bitcoin exists on the blockchain within digital wallets. Now, these digital wallets can be held by companies or individuals, but in theory, they're completely anonymous. Now, that is a very brief and simplified explanation as to what Bitcoin is, but hopefully that does give you the basics to understand it. It's definitely worth digging deeper and trying to learn more about it than what I've just explained. But for me, the main things to take away from it is that it's a finite asset of 21 million, and it's decentralized and can't be changed or tampered with. Now, with all of that in mind, Why are people so against Bitcoin? What is it that's so off-putting about it? Well, firstly, it's pretty damn complicated. I've tried to explain it very simply, but it's far more complicated than is possible to explain within 30 seconds. I've personally been deep in trying to learn more and more about it for about a year now, and I'd be lying if I said I fully understood it. It's kind of like the internet. I know how to use the internet, but I don't particularly understand the details of how the internet actually works. Some of the confusing elements are blockchain technology as a whole, what Bitcoin mining is and how that process works, and also the custodial process and understanding if when you bought Bitcoin on an exchange, if you actually own it or not. There's so much to learn and understand with Bitcoin, and it can be incredibly overwhelming. And the fact is, if you don't want to invest in something you don't understand, Bitcoin is probably going to be the asset you understand the least compared to investing in companies, property, or any other physical asset. Now, as well as the technology itself being complicated and difficult to understand, there are also a ton of acronyms that make it even more confusing. The Bitcoin halving, multi-sig wallets, fiat currency, layer 2 technology, sats, what it means to hodl, and really the list goes on. So this also adds another barrier to entry as there's just so many terms to learn and it is just a lot to get your head around. Another reason is that Bitcoin is extremely volatile and it has been since its inception. And this honestly is unlikely to change overnight. And because of this volatility, it can seem particularly scary to invest in something like this, because you could end up being one of the big winners or just as easily become one of the big losers and potentially losing a lot of money, as timing can seem key. In the past, Bitcoin has also been associated with illegal activity, due to the fact that it's decentralised and wallets provide anonymity to users. One example is on the dark web, where it's used to purchase illegal services and products. Now, although it has been used for things like this, it's not just for criminals. Bitcoin itself is neutral, and actually now the majority of transactions are used for legitimate purposes. Governments and regulatory bodies are also putting in a lot of work trying to produce a framework to try and crack down and prevent these illicit activities, whilst allowing responsible and legal uses. But the fact is, this history has done a good job at tainting Bitcoin and dissuading people from the asset. Now, following on from this point, public opinion has also done a good job of scaring people off. What I mean by this is that there are a lot of prominent figures within the investment world who are very against Bitcoin and are very vocal about it. One example being Warren Buffett, who is probably the most influential investor of our generation. He's been quoted to say that Bitcoin is rat poison squared. And there are many other figures like him that share a similar view. However, that is changing and I'll go over that later. Other prominent figures within your life might also share similar views. For example, your family, your friends. If the majority of the people that you trust and surround yourself with are against something, it's very difficult to go against the grain and try and learn more about this thing that other people are not excited about, especially if you trust and value their opinions. Another reason that puts people off Bitcoin is that it's often grouped with the crypto market as a whole. And unfortunately, the crypto space is riddled with scams and Ponzi schemes, and many people have been burnt by them. I would say around 99% of the crypto space as a whole is made up of scammers looking to line their own pockets, and only about 1% is genuine and trustworthy. There are so many pump and dump crypto coins out there that can be created by literally anyone. As well as this, we've had the NFT craze where people have been selling worthless JPEGs for thousands and thousands of pounds. And in November of 2022, we had the collapse of crypto exchange FTX, where they were basically stealing customer funds. So because of all of these scams and the nature of the crypto market, you have to be incredibly careful with your security. And honestly, the fact that it is like this can be very scary and off-putting. The custodial process of owning Bitcoin is actually more complicated than it might seem. And currently there isn't a lot of regulation to protect investors when buying through an exchange. So unlike with a traditional bank or investment platform, which are regulated by the Financial Conduct Authority, if one of these goes bankrupt, your money's covered for up to £85,000. Whereas with the crypto market, there isn't this kind of regulation, so it's a lot more risky. For this reason, many people advise you to move your Bitcoin off one of these exchanges and into a private wallet instead. There are digital wallets that you can use online, but there are also offline options where you can use what's called a physical hardware wallet to store your Bitcoin privately and offline. Now, although it's good that these options do exist, it does kind of mean taking your security into your own hands, which can be very scary for some people. So it might just seem easier to stick with the things that are regulated and less complicated. That basically covers all of the things that I can think of that might scare people off Bitcoin, but let's now look at some of the positives and why we should be paying attention. I'll start off with some of the more obvious ones. The first being is that it can be used as a worldwide currency. Anyone with a Bitcoin wallet and address can send and receive Bitcoin from anyone else all around the world, providing that it's not banned in your country. But otherwise, you can send money freely. You don't have to worry about exchange charges like you would if you're sending pounds to the USA, where it needs to convert into a different currency, because you're basically just sending Bitcoin to a different address. It also takes away so much of the hassle with overseas bank transfers, where sometimes you have to fill out a load of paperwork to get it accepted. And the whole process, once it's been actioned, can take days. And you will be charged a fee for doing so as well. There's also no risk of the transfer getting tampered with because it's all on the blockchain and every transaction is visible and unchangeable. So there is that extra peace of mind. However, with that being said, you always have to make sure that you're sending it to the right address. And in theory, sending Bitcoin from one address to another is completely anonymous. So if you want to be a bit more private about your finances, it has that benefit too. There is a fee for sending Bitcoin payments within the network, but this can vary depending on how quickly you want the payment to go through. And sometimes the transfers can vary from between 10 minutes or a couple of days. The next reason is that you could simply see Bitcoin as an investment opportunity. Bitcoin historically has been a growth asset, and it could be worth considering from the point of view of diversifying your portfolio and being exposed to these huge potential gains with even just a small proportion of your investment portfolio. Obviously, it is extremely volatile, so with those huge potential gains, there's also the potential to make huge losses. But over the last year, it has been the world's best performing asset in terms of returns. And if you would have invested just 1 year ago, you'd be up 117%. Another way that you could potentially view it as an investment asset is as a store of wealth and safe haven product that's also a hedge against inflationary currencies. We're seeing a lot of central bank currencies experience huge rates of inflation, and often in times like these we see people putting their money into scarce assets and physical assets to try and protect their wealth against the inflation. And due to the nature of Bitcoin also being a scarce asset of only 21 million, it ticks that box too. And as long as people believe in the value of Bitcoin, this scarcity makes it valuable. Now, aside from whether it's a good or bad investment opportunity, what it does have going for it is that it's extremely accessible. Aside from having a savings account or investing in the stock market, most other investment assets are incredibly inaccessible. For most people at the start of their journey trying to build wealth, property is just too expensive and out of reach for many, unless they're already on the property ladder. And if you want to invest in physical assets like gold, there's quite a barrier to entry in getting the infrastructure set up to actually store that gold, and this can be a costly process also. You can invest by proxy in gold ETFs that trade on the stock market, but you don't actually own that asset, and potentially it could be open to manipulation. But I think I'll save the deep dive into that topic for another video. Now, when you compare the ease of investing into these assets to Bitcoin, Bitcoin is far easier, and the cost to invest is practically nothing. You could buy as little as £5 worth of Bitcoin and take custody and securely store it for next to nothing. And for starting out investors who don't have huge amounts of capital, this can be incredibly appealing. Another reason that I briefly touched on before is that it can be seen as a hedge against inflation, but also the potential complete collapse of central bank currencies. Now, this may sound incredibly apocalyptic and sinister, but the fact is, the world economy is not in a good place, and there's a global debt crisis that's getting out of control. If we look at just the USA, which is the world's largest economy and supposedly has the most stable currency, the dollar, there is currently $33 trillion worth of debt, which is growing at a rapid pace of around 2 trillion per year. And when you consider that the total GDP, which is the measure of total economic output, similar to a company's revenue, is sitting at around 27 trillion for this year, that doesn't even come close to covering that debt. With new higher interest rates, this debt is also getting more expensive for the central bank to hold, as they have to pay more of a premium to lenders. So these factors and a number of many others are contributing to the debt crisis just getting worse and worse, and it could potentially spiral out of control if it hasn't already. Now, that's looking just at the US, but most governments are in exactly the same situation, just to different extents. Now, the way these governments and central banks usually try and get around this issue is by implementing a process called quantitative easing, which is effectively where they create or print new money to try and offset this debt and get the economy going again. But the problem with this is that at the same time, it's devaluing the currency entirely. And as a result, everyday people like you and I have to try and find ways to stop our money from being devalued by doing things like investing and trying to get our money to work for us. And if we don't, we're essentially getting poorer every day that inflation exists. Now, the theory is there's going to be a point in time where people just stop accepting the fact that they're being made poorer by these governments making poor financial decisions. And we're seeing it in places like Argentina, which have had corrupt governments and out of control inflation. The people, if they're able to, are rejecting the Argentine peso and using dollars instead, as it's a more stable currency and therefore better store of wealth. But in theory, this could also happen to the dollar, the pound, the euro, whatever stable currency you think you have, it might actually crumble as well. And that's really where Bitcoin comes into play, as it's not controlled by any central bank or government, and it can't be manipulated or inflated in the same way. So honestly, the more and more I learn about economics, the more I think that Bitcoin really is the answer. Now, similar but a bit different to this last point, another reason for Bitcoin is to have more freedom over your own finances, away from the potential manipulation or interference from central banks, governments, or large institutions. So what I mean by this is to effectively have what's called self-sovereignty, which means that you're effectively free to make your own financial decisions. Now, the reason that this is becoming more relevant is that we're seeing an increased number of large institutions and governments trying to have more control over us as people, as I think we might like. One example was in Canada, where we had the trucker protests, and as backlash for this, some of these individuals had their bank accounts frozen, which really shouldn't be allowed in a democratic society, as having a bank account and the right to protest should fall within our rights. Another example is with Nigel Farage. Now, love him or hate him, it really doesn't matter, but the fact is he recently had his bank account closed with Coutts, which is part of NatWest, purely because of his political opinions, which he's entitled to have. As a result, people within the bank have been sacked because of this, but the fact is, it's quite scary to think that they can do this very easily. And unless you have a platform to challenge it, what are you going to do? Another reason that we should be paying attention to Bitcoin is that it's fundamentally a growing network. Despite the huge crash over the last couple of years in the price of Bitcoin, the number of active addresses has barely been affected, and we're still seeing the number of new addresses increase, implying that people aren't being dissuaded from investing in Bitcoin. Large institutions who previously wanted to have nothing to do with Bitcoin are also starting to take notice. Most notably BlackRock, who are the world's largest asset manager with over $9 trillion worth of assets under management. Their CEO, Larry Fink, has always been very negative about Bitcoin, and has once been quoted to say that Bitcoin is an index for money laundering. But BlackRock have now completely changed their stance and have a Bitcoin ETF lined up to launch. And at the time of making this video, the ETF hasn't been approved, but it's thought that it's in process and very likely to happen. This ETF is just one of many that have been applied for. And what this means for Bitcoin is that once they're approved, there'll be a huge influx of capital into Bitcoin. And it will make it more accessible and possible for large financial institutions to invest into Bitcoin. And it will be possible for everyday investors like you and I to invest within tax-shielded products like ISAs or pensions. All of this potential action could have a huge knock-on effect on the price of Bitcoin, and there is serious potential for the price to skyrocket, but also stabilize from a volatility point of view once there's more investment into the asset. Now, the final reason to be paying attention to Bitcoin is the future use cases. Although Bitcoin itself isn't perfect at the moment, there's potential for new technology to be built within the ecosystem. One example of layer 2 technology that's been built on top of Bitcoin is the Lightning Network. When sending Bitcoin from one wallet to another, for small amounts it can get quite costly. And like I said before, it isn't actually instant. But with the development of Lightning, which has been built on top of Bitcoin, this allows for instant transactions with very, very small fees. So it solves that initial problem with Bitcoin. Now, this is where it all gets really quite complicated. However, there's huge potential for development and other use cases of the technology. And all in all, it's really exciting what the future might hold. Now, with all of those positives and negatives considered, personally, I can see past a lot of the concerns, as I think the potential is huge and I want to be a part of it. With the current state of the economy, I've been slowly accumulating more and more Bitcoin over the last year or so. And I find myself feeling more and more comfortable keeping my money in Bitcoin than any other asset. The idea of allocating just 1% of my investment portfolio to Bitcoin seems crazy now, as I understand it a lot more than I did 2 years ago. I have, however, learnt from my mistake and will never be trying to earn interest on my Bitcoin like I did prior. And I'm also never going to keep my Bitcoin on an exchange. But this video is getting a bit long now, so I'll save my full Bitcoin investment strategy for another video. Also, in another video, I'll be running through the process of how you can buy and store Bitcoin and the strengths and weaknesses of the different methods. So do look out for that if you're interested. To do so, make sure you hit that subscribe button down below and click that bell so you never miss a video. In the meantime though, if this topic has interested you even slightly and piqued your interest, I would highly suggest researching it more yourself, as I've tried to keep everything a little bit simplified so it's more accessible for the purposes of this video. If you do want to learn more though, here are some names that I think would be worth looking up. So Michael Saylor, Lynn Alden, James Lavish, Parker Lewis, Saifedean Ammous. Also, if you like podcasts, there's What Bitcoin Did with Peter McCormack, there's The Bitcoin Layer with Nick Bhatia, and Coin Stories with Natalie Brunel. But that's just to name a few, and there's loads of other great content out there. But that covers everything I wanted to go over today. So if you did make it this far, please do me a favour and smash that like button down below, as it does really help me out. But also do let me know your thoughts down below in the comments. Do you know much about Bitcoin, or is this something that's new to you? And do you think I've completely lost my mind, or have I raised some valid concerns? Either way, I'd love to know, so drop your thoughts down below. But with all of that being said, take it easy guys and enjoy the rest of your day.